It's fitting that Donald Trump, the day he gets his pretty much his nomination, said, "I am the king of debt. I love debt." So yes, this is what we're going to get in a country which already has more debt than all the other countries combined.
Hey guys, it's Friday, May 6th, and we want to get ahead of the latest breaking news from the world of economics. The non-farms payroll report came out this morning, and we have Andy Hoffman back on the line to talk about that and more. But first, guys, I just want to mention, I almost did a special video about this the other day. Real quickly, you guys probably are familiar with Google Doodles. Every day, Google has a new one, and on May 4th, they had the strangest Google Doodle. Here it is. Take a look. Does that not look like Janet Yellen to you? And for those who have been following the news of the Arch of Baal, or otherwise known as the Arch of Triumph, also known as the Arch of Titus, you can follow Jonathan Kleck's work to find out more about that. Look to the left of this Google Doodle. There's the Arch of Baal, and there's Janet Yellen. Don't know exactly what it means, but when you understand that the bankers rule the world, it does make a little bit more sense as they roll out the Arch of Baal replicas in London and coming soon to New York City. Andy, it's a strange world in which we live. Let's talk about the non-farms payroll report. Government says unemployment's still only 5%. We're in good shape.
Yeah. Well, yesterday I wrote an article called Fraudulent BLS versus the Real Precious Metal Bull Market, the Final Showdown, because I knew at some point, particularly this month, after all of the horrible, horrible economic data across the board, much less Wednesday's ADP report, that it's at the point that today they're either going to be forced, because again, they could put out whatever number they want with all the adjustments. They're going to be forced to either put out something closer to reality, which is terrible, or to lose their credibility entirely. And, they tried to mess around with the numbers, but in the big picture, it was much, much worse than expected on all facets. Of course, the 160,000 jobs was much less than the 200,000 that were expected. In reality, though, the number of jobs was minus 300 and something thousand. They just used their adjustments to call it plus 160. And even they couldn't hide, as usual, the devil in the details. 233,000 birth-death jobs were added, even though more companies have died than been birthed since the financial crisis in 2008. The labor participation rate had a plunge from 62.8 to near its all-time low of 62.6. All of the jobs were service jobs. All of the jobs were people that were over 55 years of age. All of the jobs were from immigrants, et cetera, et cetera, et cetera. And the net of it is that the odds of a Fed rate hike this year are now zero. They're talking about 0% chance until 2017. So as I said all along, there's not a chance that there's ever going to be a rate hike again until hyperinflation comes around. This is the all clear that the precious metal bull market is in full force, and no matter what the cartel tries, whether it's today or tomorrow or going forward, they're going to lose. Record demand around the world. People are scared of negative interest rates. They're scared of QE. They're scared of collapsing economies. They're scared of what the new politicians are going to be and what they're going to do. And this is a new paradigm of a scary world that's only going to get scarier.
I was having a conversation just the other day with one of my neighbors who is awake to a lot of this stuff, and he's willing to at least have the conversations about the fraudulent reports that come from the government, about the risk of hyperinflation, about central banking, that sort of thing. He's one of my most awake neighbors. His name's Jim. He's a good guy. And we were talking about this service economy. And I said to him, Jim, 72% service economy. What happens when the middle class is completely gutted and there's nobody left to go to the Starbucks and there's nobody left with pocket money to go out to eat? What happens? The service economy, what's left of this fragile U.S. economy, will collapse entirely. The manufacturing space in this country is already completely dead. Look no further than the 300 idled Union Pacific locomotives sitting in the Arizona desert, Andy.
Well, yeah, again, I did an audio blog a year ago called The Municipal Services Boom, and this is just, the propaganda is, look, we've lost all the manufacturing jobs, partly because the economy has peaked and started to collapse because of all the money printing, and partly because the jobs went overseas, because A, the Chinese realized that they can do things cheaper, and B, our corporate titans sold us out for some extra profits. So since then, the propaganda has been about a, quote, service economy, but there's no such thing as a service economy. I guess you could say in India, the big thing they do is call centers. I don't know if that's really much of a service. But here, buying things is not a service, and being a stockbroker or a healthcare worker is not a service. It doesn't produce anything. So the fact that most of the jobs are related to socialism or just or basic needs has nothing to do with productivity. The fact is that the actual number of real jobs, goods producing jobs, is not flat or slightly down. It's plummeted, and it will keep plummeting for years to come. So the government is going to need to get bigger and bigger and bigger. And, it's fitting that Donald Trump, the day he gets his pretty much his nomination, said, "I am the king of debt. I love debt." So, yes, this is what we're going to get in a country which already has more debt than all the other countries combined.
Well, let me tell you this, as it pertains to the fragile retail economy out there, the service economy, the people that depend on these jobs in the mall situation isn't looking very good. I was just reading the other day, Andy, that Aeropostale, one of those stores, one of those retail clothing stores that you see in just about every mall across the country, they just declared Chapter 11. You take a look at Walmart. Walmart sales are down. For anyone paying attention, it's really time to get concerned about the future of this economy, Andy.
Well, people don't have any money. I mean, people act so shocked. I mean, last year, not this past Christmas, but 2 years ago was the worst Christmas since the financial crisis, and this one was much worse than last year. And as you said, it's not just limited to the holiday season. It's across the board. Retail sales are down in every area, and malls are failing everywhere. People don't even go to malls anymore. They buy everything online. So that's more jobs that are lost, and that's more commercial real estate that has to go down in value, et cetera, et cetera. I mean, I wrote back in October, the worst global economy of our lifetimes, but things were much better back in October. That was almost a year ago. Across the board, no matter where you look, things are much worse. And this is just the ramifications of all the years of money printing, creating all of that overcapacity, which is coming home to roost. And the sad thing is that the cost of living is surging around the world, no matter at the same time that the central banks are telling us that there's deflation and they need to print money. I mean, this is the most lethal mix of political, social, and economic commentary in generations. I mean, potentially in centuries when you put it, adjust it for the modern times and technologies and communications. This is as bad as it's been, and sadly, it's going to get much, much worse. I really fear what things are going to look like a year from now, 2 years from now, because you're going to see more and more inflation. You're going to see more and more unemployment, more and more poverty, unrest, and of course, financial market chaos, starting with the currencies.
Yeah, and I'd have to believe the fear index among those who are currently employed is at an all-time high. Our friend Michael Snyder from Economic Collapse blog just reported that the number of job cuts announced by large U.S. companies was 35% higher in April than it was in March. So, Andy, people who are employed are scared they're going to lose their jobs. And so even people who are gainfully employed, heads of households, are scared to death that the shoe's about to drop and they're going to get laid off.
Of course. I mean, God, I walk around just taking a walk around my neighborhood, I run into people. I'm going to get a full-time job now. I went back to work, this, that, the other thing. People, the cost of living is rising, and people are scared to stay in place and not try to get a job. And when they do have a job, they're terrified because things are getting worse. There's very few areas that are doing well. Even technology is not doing well right now. You're seeing, look at all the venture capital companies that are going out of business right now. Companies like Intel laying off 12,000 people, IBM, et cetera. Apple, their sales and earnings have peaked. I mean, this is Apple we're talking about, the best company in the world. There's no place that's safe right now in the business world, and it won't be for years to come. Hey, except if you're selling gold and silver. Not that business has been that great. It's certainly been better, but it's one of the few areas that people are going to be buying things with. And it's, again, gold and silver is not buying anything. It's just trading your dying fiat script for real money.
Yeah, and let me get your impression on this headline, too. Prime-aged workers tumble by 280,000, while workers 55 years and over surge to new all-time high. Andy, do you think, like I do, that 55-year-old worker and older is getting that cash register job at Walmart or picking up that part-time job on the weekends at Home Depot just to make ends meet?
Yeah, I mean, look, people go into Home Depot and you see who's working there. But again, this is not a new trend. I mean, the chart you're showing is one that Zero Hedge has been publishing every month for years and years and years. It's not some of the new jobs. all of the new jobs are for people age 55 plus, and the people like this past month, the 25 to 54 were down 400,000 or 500,000, and the labor force fell 500 plus thousand. Because the only real quote jobs out there are part-time jobs, and in many cases it's retired or people who wanted to retire trying to get extra money so they can afford the cost of living. The concept of retirement is as dead of a concept as the American dream. No one can afford it, especially now with healthcare costs surging, partly because of demographics and of course Obamacare making it even worse. So look. This is what is, and the other thing that they didn't show this month is that all of the new jobs in the last 10 years have been immigrants. It isn't even Americans, and why should they? Because you get paid more money to be on welfare or entitlements than you do to work. I mean, for the majority of people, what's out there are horrible jobs, which is why they're happy to let immigrants who are desperate for money do it, because they, well, until recently, couldn't get the entitlements. But apparently now with Obamacare and et cetera, you can be an illegal immigrant and get that money printed entitlements as well. I mean, it's just a scary slope that's going to turn into communism at some point soon. I mean, you look at Japan, where the Japanese government has now monetized so many stocks that they're a top 10 holder of almost every company. And you realize that the whole world is heading toward communism, whether they like it or not.
Right. And we've talked about Japan being the first world nation to hit hyperinflation, which is what you firmly believe will happen. And I think you're probably right.
Absolutely. And, the only reason it happened there first is because of their demographics. For some strange reason, I'm not a demographologist or whatever you would call it, their population is 8 or 10 years older than everyone else in the world, right. Except for Monaco. That's the only country that's even close, and that's because it's all retirees. And as a result, their cycle of money printing started about 10 years earlier. Their peak spending was about 10 years earlier. That's why their stock market crashed in 1990 instead of 2000 like ours, and that's why their QE started 10 years earlier in the mid 1990s than ours did. And look what it's done to them. Of course, the rest of the world will never be able to do what they did, because while they were building up all that debt, the rest of the world was prospering. But now everyone else is full of debt and not prospering. So there's no way that the United States could ever get as far along as Japan has without collapsing itself. But absolutely, I think Japan is going to fall into the sea. I'm not sure I even call them a first world economy anymore, and pretty soon they won't even be a first world nation.
Yeah, I want to circle back to this 5% unemployment rate, Andy, just real briefly. And the reason I want to do it is because it's as bogus as anything coming out of the government, because 562,000 more workers have dropped out of the labor force as the participation rate continues to drop. You and I both know, and John Williams certainly knows, that the unemployment rate in this country, if truthfully accounted for, is north of 20%, isn't it?
Yeah, again, it's underemployment. You look at what the full capacity for employment is, and what people are how many hours people are actually working of that capacity, and then of course what they're getting paid, because the amount of the type of jobs they're doing is so much less. And yeah, I mean, it's Depression era right now. Of course, the situation is much worse, because in the Depression era, at least the United States was a global power and it had no debt, and the population was a lot less, et cetera, et cetera. So, and China wasn't a factor in the world. So right now, it's really not comparable. I think the only difference between now and then is that we have entitlements, and the dollar still has some value to pay for those entitlements. But it won't be for long where the dollar will lose the ability, the U.S. government will lose the ability to fund things by printing money. And at that point, if you don't have your gold and silver, it's too late, because you're going to see currency crises here like you're already seeing around the world. And people, you got to remember, again, the price of gold right now is on average maybe 10% below its all-time high around the world for like 5 or 6 billion people. So people around the world are already seeing these currency crises, which, I think not too long from now we're going to see in the United States as well.
Well, let's talk about gold and silver. I just posted a piece at SGT Report on Friday morning saying that the demand for silver hit an all-time high in 2015. I think 2016 is looking even better. What are you guys seeing?
Right. Well, again, you see from the mints, like the U.S. Mint, Canadian Mint, and they're blowing the covers off the ball. I mean, last year was a record high of demand. This year they're blowing it away, and this year they're pretty much rationing 1 million ounces a week, say, at the U.S. Mint. So it would be a lot higher The Constitution says they have to sell all that the demand is for, but of course they don't. And even not selling that, it's still going to be a record high. What are we seeing here? We see it in spurts. We saw early in the year a huge spurt of activity. We saw last summer a huge spurt. Right now, it's been good. It's not been fantastic because most Americans, they only want to buy when the price is going up, like in 2011. So right now we've had some capping going on, so they've just kind of been sitting around. But you look up and holy cow, gold is just about at its high for the year, and so is silver. And I don't think it's going to be long, especially now that everyone realizes the Fed is going to do nothing, that there's going to be another spurt. And I truly, truly believe that there's going to be a major shortage sometime this year in the silver market, just like we saw last year.
Well, Andy, before I let you go, I want to talk about manipulation of the markets, manipulation of gold and silver. We know the Deutsche Bank story that they've apparently claimed responsibility for rigging the silver and gold markets and have opened themselves up to, billions of dollars of lawsuits. The ECB has talked about market manipulation. Market manipulation has gone mainstream at this point. And I think if there's any good news, Andy, I want to share a little bit of good news. When I mentioned CNN, Mockingbird, mainstream media, nobody's listening to these people anymore. Nobody believes anything coming out of the establishment anymore. The Bush crime family has said that they're not going to support Donald Trump. I'm not saying Donald Trump's a good guy, but the Bush crime family, who needs them? And the good news is nobody believes any of this anymore. And even Kyle Bass has said all markets are manipulated.
Right. Well, again, the ratings at those stations will show you whether it's CNBC or Fox or anything. No one's even watching, let alone care what they have to say. And they are starting to turn on each other. I mean, my article the other day was called "Market Manipulation Goes Mainstream as the Powers That Be Turn on Each Other." In particular, I was highlighting what the ECB did. I just couldn't believe this. They did this whole study and put it out this week saying, not European markets, United States markets are manipulated. People are getting inside information ahead of all the key economic reports and trading on it. The point being that even the powers that be are splintering, they're fracturing right now. It's every man for themselves. No one is listening to propaganda anymore, and everyone is trying to find a scapegoat. And the more people do that, the more that markets are going to fall apart, and the more people are going to flock into gold and silver and away from the paper assets that used to be supported by the propaganda. I mean, even CNBC is writing articles right now saying the Fed would be crazy to raise interest rates because everyone knows that it's not happening. Everyone knows there's no recovery. I cannot wait to see what happens going into this election year with the Federal Reserve because I truly believe we're going to see QE4 before the election.
QE4 before the election. All right.
Yeah.
Well, so odds are we'll still have an election, Andy? Or is Obama just going to declare himself king and call off the election?
Well, something pretty bad would have to happen to stop Donald Trump from being president because right now people are so angry they will vote anyone in right now who is not a part of the current establishment.
Yeah, and one thing on Donald Trump, I don't think he's a savior. I don't think anybody's going to come and rescue us, believe me. But the shining beacon of hope I see, Andy, is that the people in this country who are awake and aware to any degree can't stand Hillary Clinton. They loathe the Bush family, which is why Jeb Bush had no chance. They didn't want to drink the Kool-Aid as it pertains to Ted Cruz or Marco Rubio. So we're left with a lot of support for Bernie Sanders and a lot of support for Trump, which may just usher in a new fascist future for this country. I'm not sure. But one thing's for certain. If Hillary, criminal crime boss Clinton, gets into the White House again, we're doomed.
Well, just remember, everyone, it's not just here where this is happening. You look around the world and people are voting for people who are anti-establishment because they are angry, because they've seen the same destruction of their lives, their cost of living, their currencies, etc. And as a result, you're going to see some pretty dangerous changes in the world in the coming years.
Andy, before I let you go, first of all, I want to thank you for your time. Second of all, I want to thank the listeners for tuning in and thank them for their time. We couldn't do this without your support. Thanks for checking us out at sgtreport.com. But I did recently attend one of your precious metals conferences when you had one here in Minneapolis. When is your next one, and how do people take part in it?
Yes, this has been great. Each one we've had more people. The last one was in Fort Lauderdale a few weeks ago. We have two more that are scheduled. The next one is in 2 weeks on Friday, May 20th in Houston. Like the others, it's free, dinner included. Come out, myself, Andy Scheckman, our president and co-founder, and ask any questions you'd like. That's May 20th, Friday. And after that, We have one on Friday, June 24th in Chicago. Just email me at ahoffman@milesfranklin.com, and I'll be happy to get you registered.
Hey, I know we said we're going to say goodbye here, but I just got to ask you one last thing. Are you buoyed by what's going on with the SGE and the ABX and just this move that we're seeing of physical away from the LBMA, away from the COMEX, and over to China at the SGE?
Oh, absolutely. I mean, it's not any singular event because I can't quantify them, but there's a mosaic that's being built here of trade away from the United States. The production, the demand is away from the United States. Now the trading is moving away from the United States. The usage of the dollar is moving out. And is it a coincidence that right after the Deutsche Bank announcement and the Shanghai price fix started, that all of a sudden you had this big surge up in precious metals? I don't know, but I got to think it's a part of it. And these are just the beginning of these things. I mean, we're talking about massive secular trends here that are going to go on for years. You're just going to see more and more of these announcements until one day you wake up here in the United States and you'll see that the price of gold already had its move for the day. It won't be anymore where you wake up here and go, oh, I hope it doesn't get hit in the COMEX. You wake up and you go, oh, gold was up 2 or 3% in China, and that's it. Because eventually there's going to be no more trading over here. It'll be completely discredited, and all the movement will be where the physical is, over in the East.
Yeah, and guys, I don't think that's hyperbole. We've been talking about this. We've been documenting the collapse for a very long time, and I'll leave you with this. Here's the image of that 1988 Rothschild Economist magazine cover with the phoenix rising from a burning pile of fiat. What's around his neck? Take a look. What's the cover say? Take a look. We're very close to 2018, so what Andy just described, it's getting very, very close. I want to thank you all for listening. Andy, thanks for your time.
And thank you as always, Sean.
All right, and guys, thanks for your support at sgtreport.com and thelibertymill.com. Real news, 24/7. Have a great weekend.